record on this computer. There we go. Now I'm going to go back to share screen. Okay, so I want to welcome everyone to my basic accounting and tax CEO training. Today, we're going to learn what every financially savvy business owner should know, basically about their accounting and their taxes, because what the money is the heart of the business. So we are in business to make money, and the money is the heart of the business. And we just need to make sure, we need to understand how to take care of the business and its finances. But as a CEO, as a new CEO, first generational business owner, sometimes we weren't, not even sometimes, we weren't trained. When we went to school for our degrees, we were trained on biology, psychology, maybe took an accounting class, you may have taken a basic business 101 class, but it did not teach us how to run a business. So today we're going to learn some of the things that are important as it relates to your finances and your taxes with your business. All right, so I want to welcome everyone. My name is Deanna Grant, aka Tax Boss Lady is my code name. I am a tax strategist, but I'm also the CEO and founder of Grants Financial Services. So my mission in life is to empower and educate women entrepreneurs and people of color to get to 1 million in revenue. And that is completely doable, so they can make a difference in their lives, their businesses, their family, and we can create generational wealth in our communities. 1 million is just maybe a first step point, because there's beyond that. But I have a special place in my heart for women scaling to 7 figures, because it seems like to get to that first 7 figures, there's a lot of things, there's a metamorphosis that has to happen for you to get to those 7 figures. And but you have to run your business by the numbers. So today we're going to talk about some of those things. So we're going to do tax and accounting topics. All right, so who am I? I'm the owner of a multiple 6-figure tax business. I'm a business financial coach and speaker, like I said, of tax topics. I had repeated this, but I have a special place in my heart to help 6 to 7 figure business owners make up to 7 figures, but I also am a tax strategist. So I can help you save between 10 and 20K in taxes, if not more than that, but that comes with tax planning. So if you have the money rolling in, I have some strategies for you to help you save tax dollars. But today we're focused on the basics, the foundation of business principles as it relates to accounting and taxes. I've actually worked exclusively with business owners for the last 20 years. I started my career not at a large CPA firm, but I started at a smaller Black-owned accounting firm it was actually downtown Chicago. And so I didn't work on McDonald's books. I worked on books of our African-American community businesses. So some of our restaurants, some of our restaurant franchises that we as Black people own. I've worked with some of our medical offices, some pharmacies, some medical supply businesses. So all types of service type businesses that have exceeded 7 figures. And so but I also understand the pain points of these business owners. A small business has a lot of pain points, and my whole experience has been with small business owners, and I love it. I personally prepared over 10,000 individual tax returns, because as some of the stuff we're talking about today, I also have learned how to be a CEO. So I've been the main person doing everything in my business, and this year I am being a CEO, and so I now have a team of 10. All right, so a little bit about me. That's my office in South Loop. I don't know, that's me feeling financially empowered. And I'm a mother. So I'm a mother, a divorcee, and how I started my business was 3 things happened to me all at the same time. This is how I even got started. This is how I took the leap of faith and left my corporate job. So all in the same month, I think it was October of 2009 when this happened. First, my ex-husband left the house. So I was left to be a single parent. Then my dad passed away. I think 1 week later, my dad passed away. Then I got fired from my job. So all of these things happened. It was like each week something happened, and I really didn't know what to do. I had all the security that I could have in life from a marriage, a job, and a parent all left me at the same time. When I got to January of that year, I was like, you know what? I'm gonna start a business. I had nothing else to lose. I'm like, what else do I have to lose? If this doesn't work, then what do I have to lose? Because I never thought I would lose everything. So I was so super excited that's how Grants Financial was birthed. And I started with 10 tax returns. Last year, we prepared over 400 tax returns. And we also service entrepreneurs on a monthly basis. And like I said, I'm here to help business owners understand their accounting and their taxes and scale from 6 to 7 figures. So today we're going to learn about what every CEO should know about making and managing money. And I have a little quote from the Bible: "The plans of the diligent lead to profit as surely as haste leads to poverty." So basically, you need to be planning and proactive. A CEO plans, and they plan, they create strategy, and they know their numbers. All right, so today's presentation, we're going to talk about best practices for managing your accounting and tax records, how to understand and implement the S-Corp tax strategy, any important business tax due dates, we're actually going to do that first, understanding 1099 versus W-2, how to pay yourself as a CEO. There's so many CEOs that this is a pain point for CEOs. And like, you're making a lot of money in your business and you pay your team, you pay your vendors, but you can't pay yourself. So we need to really look into that, like what's going on, because every CEO I know, like I know that like just say the CEO of Facebook or the CEO of Amazon, Jeff Bezos. I don't even know if he's the CEO anymore. He may just own Amazon. But Jeff Bezos and those other CEOs, we don't know not one CEO that's broke. So we have to start shifting our mindset to understanding we are the CEOs of our little small enterprise, and we are in business to be profitable, and that's why we're in business. You want to read and review your financial statements, and then we're going to do group Q&A. And I have like a business tax guide. I got a financial journal for you, and we're going to go over my Know Your Numbers strategy template. And this is going to be you're going to enjoy understanding how to use the template. I'm going to go over it personally, and then I'll send you a copy of the template, because this will set your 2021 in the right direction, which is running your business by the numbers. Okay, so it's a mindset shift. This is one of my favorite books by Dr. Venus Opal Reese, The Black Woman Millionaire. I actually just recently watched her story on Amazon, and she was just talking about being a business owner and how we have such a scarcity mindset. And I'm pretty sure it comes from something historically in our blood, but women specifically, we want to serve, we're so used to serving our family, we're so used to giving. And so when we get into business, it's not that you can't serve your customers or you can't be giving, but you have to be strategic, and you're not in business to just struggle. You're in business to make money and to be profitable, and not to be the person that has the cheapest price. Your price is determined by the service that you want to give. So depending on the service that you want to give in your business, that's what dictates the price. It's not about being the cheapest. It's not about putting the whole community on your back. It's about making a profit and being happy in your business. So there's some things I just wanted to go over. There's some important steps you need to know to manage your business finances and to end the financial frustration. So we'll talk about what most business owners get wrong when it comes to managing their finances, the reason you're struggling to pay yourself and your team, and you feel like you're working for free 99, which one of my favorite quotes is, "Profits are everything." I do not believe in working for free 99. And the reason sales are coming in, this is sometimes like when a lot of business owners get to six figures, multiple six figures, then sometimes this is their issue, which is sales are starting to come in, but they're not seeing any profit. So why does my bank account balance not increase? Why do I have a lot of sales, maybe have six-figure sales, but I don't see any profits? So we're going to discuss that today. I wanted to start off, I always start off with my elementary lesson of the type of entity, because a lot of us business owners, we actually incorporate our own businesses. And sometimes we do not go and seek legal counsel and or our accountant's counsel to start the business. So I wanted to go over this is part of the basics. I wanted to go over the different entity choices that you could choose when starting your business. So there's sole proprietor. Then there is LLC. There is S corporation. There's partnership tax return, and then there's corporate tax return. Now, sole proprietorship. I like the sole proprietorship because if you want to start a business, you don't have to have any paperwork. All you need is yourself and the vision, the dream, and take action. So anyone can start a sole proprietor. They usually like start off as a side hustle. So sometimes you could be selling Avon, you could Uber drive, you could whatever you want to do in your business, but you start the business without actually incorporating. So you are considered a sole proprietor business. That actually is that type of business, the income and expense is actually filed on your personal 1040 tax return. So you do not have a separate tax return. You actually file your sole proprietor business on your personal tax return. Now, here we go. Single member LLC. This confuses a lot of people. A single member LLC is an LLC where there are no other partners. So you are the only member. So a single member LLC actually files their taxes on their form 1040, which is your personal tax return. A lot of people or business owners start a LLC and they do not understand that you actually file a single member LLC on your personal tax return. It's one and the same. You file it together. Okay, then we have the S corporation. Now, an S corporation is actually a tax election. It's a way that you elect to be taxed and to pay lower amount of taxes to the IRS. Is a tax strategy. It's not really an entity choice. Then you have the partnership tax return. A partnership tax return is typically the LLC with two or more partners. So when an LLC has two or more partners, you file a partnership tax return. That is form 1065. I want to go back to the S corporation. The S corporation is filed on form 1120S, which is a separate tax form from your personal tax form. The business files a separate tax form. Same with a partnership. The partnership has a tax form 1065. And then if you are a corporation, that is a whole separate entity. It's completely separate from your personal. That is filed on form 1120. So those are the different types of entities. Now let's go into when are these tax returns due? Because a lot of business owners do not understand when the tax returns are due. So there are levels. Let's see, when is it due? So I'll just go over when it's due. A sole proprietor is due April 15th. The single member LLC is due April 15th because that goes on your personal tax return. The S Corp is actually due March 15th. The C Corp is due April 15th. Now, I want to remind you, I am a tax strategist. So when I say that I can save my business owners between, actually it's 10 to 40K in taxes, especially when you're a multiple six-figure business owner, as a strategist, sometimes I choose three or more, just three entities so that I can reduce your taxes. So if you're an LLC, I sometimes like the combination of entities, meaning we form three different entities and there's a way where you can transfer money between the different entities so that we can save tax dollars. So I would form I actually like a sole proprietor, an S Corp, and a C Corp. Also a nonprofit too. But the sole proprietor, S Corp, and C Corp, there are a lot of different tax deductions and tax strategies we can take to reduce your taxes. And that's just when you are building your business past I'm gonna say the first 6 figures. Once you get past the first 6 figures, and really when you're going headed to that $500,000 stage, it's time for us to start implementing tax strategy. And strategy is not one entity, it sometimes can be 3 entities. And that's how you really save the tax dollars. So people talk about like Jeff Bezos, and they're like, Amazon didn't pay any taxes. We always talk about that orange guy. The orange guy, he didn't pay any taxes. Well, both of them have a complete tax team, and they do tax strategy and tax planning. And that is how they reduce their taxes. They don't just wake up and then get their taxes done once a year. They actually have a relationship, or they probably have a whole accounting department. They probably got a tax department there. In their accounting department, it includes a tax department and an accounting department. But it's a wealth formula. It's one of the wealth building principles. Saving tax dollars is a wealth building principle. All right, so today we want to talk about like, what is the role of a CEO? Because I want you to shift your mindset. Although your business is small, you are the CEO of your business. And what CEO do we know that does not get paid? CEOs get paid. CEOs make money for their company, and they make money for themselves. So what is a chief executive officer? It is the highest ranking executive in the company whose primary responsibilities include making major corporate decisions, managing overall operations and financial resources of the company. So basically, there is a lot of responsibility. So when we start a business, we actually are granted a lot of responsibility because we're the CEO. So it is our duty to make sure that the business is able to make the right decisions, because business is about making a lot of decisions. Sometimes you make wrong decisions, sometimes you make good decisions, but good decisions pay off. Bad decisions penalize, but you cannot, as a new business owner, you can't have fear. You have to eliminate fear, and you must make decisions. But the CEO makes decisions, they manage operations, and then the financial resource of the company. So they don't just like go by the seat of their pants. Like, they actually plan and strategize and delegate. Plan, strategize, delegate. It's a lot of responsibility, and that just should make you feel like, important. I'm the CEO of my business, and I have to think like a CEO about this business. I don't care how small it is. You're the CEO of the business. But of course, as a newer business, we wear a lot of hats. So the next hat, so I want to shift your mindset as you look at your business. You're the CEO. But another hat that you should wear, and now you could kind of share this hat with me, because I am like a chief financial officer. But as the CEO of a smaller company, you also need to be the chief financial officer. And like I said, your relationship with your accountant, we could kind of share this duty. And I'm very good at helping you analyze. The CFO analyze a company's financial strengths and makes recommendations to improve financial weaknesses. They also track cash flow, and you will oversee a company's financial planning, such as investment and capital structure, because your business is an investment, and actually the time and money put into the business is to make it grow. I try to tell people to think about their business just like to think about your business like an investment. So for example, if I went and bought Apple stock, I go and pay Apple some money. So that's an investment. It's the same principle for your smaller business. It's an investment. I wanted to show you a visual about understanding investing in your business. And although your business is small, what does that investment look like? Well, what could that investment actually look like? So we're going to go over, I have a template that can show you about, here it is. Okay. So me and my strategic partner, we actually created this chart because a lot of entrepreneurs do not understand that in their business, they're making an investment. So we came up with this, like from the first year to the 5th year, even if you did not make $1, what are some things you got to invest in your business? So every year, I want to talk about that business and corporation, but every year you pay your annual report fee for your business to your Secretary of State, depending on what state you're in, the fee changes, but every year there's an annual report fee due to the Secretary of State for your name if you incorporate. So if you have an LLC or a corporation, every year there's a form that's due to pay your state, Secretary of State. That's the governing agency that governs the incorporation of your business, and you pay this fee. If you don't pay this fee, they dissolve your business. So it's very important to understand, depending on what state you're in, the fee will alter. And sometimes, like I think Texas, their fee is like every 2 years. So it kind of depends, but if you're in Illinois, that fee is due annually. And I believe they took it down to $75, but it's still an investment. If you have no customers, you still have to pay that annual report fee. Then there is your business tax return. Now, I think if you use TurboTax or something like that, it would be $180. But actually, nationally, to get your business tax return done on a smaller scale, it's at least going to be $550. Then now you're in business, so sometimes you have some legal contracts and agreements that you have to download from, like, I think it's like Rocket Lawyer or LegalZoom, because you're onboarding contractors, you're making proposals with clients and different contracts and agreements. And when you're first starting, you usually have to pay for, the template. So then there's a budget for that. Then you got your social media person. Then you got other business collateral, website, business card, logo, marketing. Then pre-COVID, we used to do a lot of client meetings, used to do a lot of coffee meetings, virtual meetings, lunch meetings, dinner meetings. So then there's some client meetings that could potentially go into the budget. Then, oh my God, software costs. Right now, software as a service, software, you no longer can just buy your Microsoft Word and keep it for 4 years. You have a Google monthly fee, you have Calendly fee, you have your email fee, you have QuickBooks software fee. There's a lot of, like, you have any type of, like, a lot of your softwares, if you have to have a customer software for the field that you're in, then tech has a lot of fees. Then there is your advisory session with your accountant. And then there's just training, webinars, and classes, because you have to invest in your company. And these are some of the things we came up with this chart as to what the investment looked like. So we estimate that even if you had no sales, at least about $2,800 a year, up to $7,000 is spent on these categories here. And this is not even really like to get a client, it's just to maintain the business. A lot of business owners don't understand that we must maintain our business, and there's cost to it. There's a basic cost to it annually to manage your business. So this is just a little chart to give you a glimpse. And then we went to, like, what it looks like when you get to the next revenue point. Like, those fees only go up. They only go up. And what happened is, and me personally, I understand this with that personal development, like there'll be conferences, there's masterminds to attend. And then sometimes your training gets, like, the business strategy coaching and masterminds. I know me personally, I'm part of a mastermind. I actually have a life coach, I have a therapist, and I'm part of a business mastermind, and I'm part of an accounting coaching program. And these programs are not cheap, but our business is on scale to get to 7 figures this year for sure. But there's an investment in that. There's an investment in all the things that I don't know how to do as a CEO of my company. I now have to pay so that I can understand how to lead my company in the proper way. So making an investment in your company, it's what you need to do to grow and scale. That is the whole point of that. So now I'm going to go back to my slide deck. Okay. I would like to see if there's any questions. Are there any questions? Because I can answer any questions if there are any. If not, I'm going to go on to my next. I'm going to go back to the slide deck. Okay, so we had left off like what's the role of a CFO, and basically just understanding that there's an investment in business. I want to briefly discuss revenue versus profit, and a lot of people get this mixed up, and we actually are going to do an exercise to kind of go over revenue and profit. But revenue is basically that top line. So for example, it's whatever you bring in, whatever you charge. So if you charge your customer $1,000 to do a coaching program, then your revenue is $1,000 because that's how much you make. It's your gross sales. So revenue is the top, they call it the top line. It's not your profit. It's just how much you charge. Revenue is the top line. Then there's profit. Profit is after expenses. So there's income minus expenses equals profit. So profit is referred to as net income on the income statement, and most people call it the bottom line. So the very top line is revenue. Then the bottom line is your net income. I want to give you a quick tip. When you're managing your business by the numbers, then you should look for your profit margin as well as your operating profit margin. I want to explain operating profit margin. In my practice, our operating profit margin is 25% because I'm a CEO and I run my business by the numbers. So my operating profit margin is 25%. What does that mean? That means if my business makes $100,000 gross revenue, top line, then I expect that our net profit, net income will be $25,000. So my percentage is 25%. So if I make $100,000, then I'm expecting to keep 25%. And that, so my expenses, that means I can only spend 75,000 out of every 100,000 I make. And those are the numbers that I've chosen. Now, so what that means is I need to monitor my financial statement monthly because I need to make sure that when I look at my financial statement that I always see my net profit percentage to be 25%. And we'll look at a financial statement towards the end. So, but those are some numbers. Also, as a CEO, you have to do strategic planning. So there's 3 key benefits to strategic planning. Your organization has a clear direction on the path you're moving, and you can identify all of your strengths, weaknesses, opportunities, and threats because you are the CEO of your business. So the time to not just work in it, but on it, you must spend time to work on it. There's a process called the SWOT analysis where you sit down and you write down what is your business, what are your business strengths, what are your business weaknesses, what are the opportunities, and what are the threats. This will help you to increase your business performance, and you're going to have a noticeable, the more you pay attention to your finances, you pay attention to the numbers, and you actually have a strategic plan, I guarantee you, you're going to have a direct and noticeable impact on your bottom line. You're going to have a bottom line. And now you understand as a CEO, profits are everything. It is not acceptable to not make money in your business, to basically you're in business and you're going day to day, and then you have nothing left over or you can't pay yourself. So when that happens, you need to really sit still and pause and look at the numbers and like, well, how come I can't pay myself? Why is every dollar I'm making going out the door? Why is this so frustrating? What do I need to do different so that I can actually have a profit? What do I need to do different? Now I see someone is saying, oh, please report the meeting of SWOT. Okay, so SWOT, it's actually SWOT. And here it is, strengths, weaknesses, opportunities, and threats. So a SWOT, it's a SWOT, SWOT. So SWOT is strengths, weaknesses, opportunities, and threats. And all you do is you get a piece of paper and you can draw like 4 squares. So you can draw like a cross in the middle and you'll put strengths in one column, you'll put weaknesses in another column, you'll put opportunities on another column, and you'll put threats. So I can kind of go over it with my business. So strengths. So the strength is I've been a tax accountant for 20 years. That's a part of my company's strengths. The strength is, I'm gonna say maybe our office is located in the South Loop. A strength is there's actually I have a team of 10. A strength is we study the tax and accounting laws, doing continuing education every year. That's a strength. Weakness is we're located in the South Loop, but we're in the storefront. I don't know if that's a weakness. A weakness is actually I'm being very transparent. Weakness is currently with my team, I feel like I'm the strongest tax accountant there, which to me, that's a weakness because we have a whole accounting and tax firm and all of my team members should be strong. I'm actually working on that. But because I know it's a weakness, I can now take action to work on it. Opportunities are like potential sales that we can have. We actually will be having a women's MBE, WBE certification program going on in April. And why do I know that? Because I've actually planned out my whole year. I may share because it's just us on this call, I may share my personal goals for the year and how you need to think about your business by the numbers and how you set those numbers. But we're going to go over that like very shortly. I'm going to give you a really good example. And this is the template that you will be able to take with you and have that CEO financial date night with yourself. Threats are PwC is starting a smaller brand. Bench.co, they're starting to do taxes. Threats are like my competition they have a bigger promotional budget. They have a team of 1,000 people. Those are threats. So as a CEO, you want to identify your strengths, weaknesses, opportunities, and threats. And this gives you an opportunity to work on these things to increase your business performance. And it's going to help your bottom line because whenever you got to pay attention to your business, not just the numbers, but the business in whole. But we know we're in business to make money, so the numbers are a big part of business. Okay, so we're going to talk about some of the money making and about making and managing money and the 5 mistakes that I actually see business owners make. So not having a financial plan. Plan to fail, fail to plan. Like fail to plan, plan to fail. No QuickBooks, no Wave, no spreadsheet, nothing. Just no financial plan. No, they have not thought about, okay, in this year, how much money have I made? They have not set a financial goal. Just running their business by the seat of their pants. That is a mistake. Not having enough cash flow. So every time you look at your business bank account, every month the balance is going down. It's a decrease in balance. And in fact, in business, sometimes you're having to if you work a W-2 job, a side hustle, or however you get more of your personal money, you're always having to put your personal money into your business because your business doesn't have enough cash flow. That's a mistake. But if we notice the mistake, we can change that because that means we need to do something. Mistake number 3, no financial management system. That's the QuickBooks, the Waze, a spreadsheet. I'm really kind of over spreadsheet. I really like QuickBooks Online because I'm pretty sure that most business owners at least want to get to that first 6 figures. And as a 6-figure CEO, you must have a financial management system. You're a CEO, CFO of your business, and you can't have after you make your financial plan and you set your numbers, you need a way to be able to you need to be able to make decisions. You need a discovery process like, well, I set my goal for 7 figures this year. And then every month you need to make sure that you're making $83,333 a month, or find a way where you're monitoring the process so that you can see, are you actually getting to your goal? And when you see those numbers, you also know, okay, well, if I want to make 7 figures, that's $83,333 a month. This month I only made 40,000. Well, first thing is I now know I only made 40,000. So what do I need to do next month or the month after so we can get our sales up? Do we need to spend money on marketing? Do we need to spend money on marketing and hire more people so we can get the stuff work done faster? But when you have that QuickBooks report, it's not just about having QuickBooks, it's about using the report so that you can now manage your business by your finances, because you're a CEO. I know, like, taking advice from friends. Sometimes your friends, your girlfriends, they're not even at the same level of business that you're at. Like, you're taking advice from them, you're asking their opinion, and yeah, maybe that works on a dating. Maybe that works for dating. Maybe it doesn't. Maybe it works for your relationships. Maybe it doesn't. I find that sometimes friends don't have the best advice sometimes, but when you're taking advice from a friend, you need to make sure that they understand your business. I have a quick story. A young lady in my office, she had just got married and she was filing her taxes with her husband. So then she said, she came to me and she was like, hey, everybody at work said I shouldn't file my taxes with my husband because it's going to make me pay more taxes. And they had the whole water cooler coffee chat about her and her husband filing their taxes and how it's going to cost more. The truth was, once we actually analyzed it and she went to the tax advisor to get a professional opinion, that was nowhere near the truth for that year in her situation. So then I said, let me ask you some questions. Were any of these people married? No. That I was done right there. So the people giving advice weren't even married. How do they know? It's hearsay. And you want to, when you're in business, we're a CEO. We don't go by hearsay and gossip. We go by the truth and the fact. And if you don't know for sure and you need help, you seek help to get you the correct answers, but you don't gossip about it. And you definitely don't take advice from the person that doesn't know what they're talking about. Now, over here on the left side, I listed out all the different tax forms that there are in taxes. Like, there's all these different tax forms that you need to know about. And if you are not a tax expert, I don't know if it behooves you to actually file your own taxes. It's like you want to delegate that to somebody who understands all the forms, understands the rules, understands the strategy, understands the tax code, all of those things. But I see a lot of people taking advice from their friends, and I just find that to be a mistake. Mistake number 5, not paying their taxes. If you're in business to make money and you're making money, now the tax strategists, we can vastly reduce a tax bill, but you're not going to reduce it down to 0. So the expense strategy, a lot of my entrepreneurs, they embrace the expense strategy. The expense strategy is when you're in business and all you think about is, how can I get a tax write-off? So the expense strategy is when you are in business and the only thing you're worried about is all the different write-offs. You're not worried about, how can I make money? Did my business have a profit? You only care about all the expenses. So that's what buzzes, that's what piques your that's what perks up your ears in conversations. Oh, what? I could write that off. I could write that off. Well, what about making money? Like, focusing on spending money is not the strategy we want to implement to grow our business. We want to focus on making money, but then when we do, you have to pay some taxes. So we want to make sure we use a system similar to the Profit First system, where you allocate money on a monthly basis for your taxes. That's kind of what we want to end up doing. So, but I find that to be a mistake, where I have entrepreneurs that made a lot of money in the year and they didn't put any money aside for the taxes. This is a trick, lady, a trick. A trick is, if you make $1,000 in a month, take 10% and put it to the side for taxes. Actually, you should put 10% to the side for taxes, 10% to the side for profits, and you operate your business on the 80%. This helps you to form good financial habits, which is a good financial foundation. Okay, next, this is what I call a little love note, And it's a love note from the IRS that one of my clients received. And they owe $24,523.02, which is a lot of money. Now, what ended up happening is they had started their business, DIY'd everything. They then started their like Square merchant service account, and then they incorporated their business, but they did not go back and tell Square that now my business has an EIN number. So what happened is they end up filing their business tax return, and Square reported the money under their personal Social Security number, and then they got this big ugly notice that you're going to panic. But I just believe that you should like I recommend for all of my like pre-scale businesses, meaning under 250K, if you do not have the resources yet, and that could, you may have the resources, but if you don't have the resources to pay for your accounting service monthly, then your relationship with your business accountant should be 3 times a year. Once at tax time. Tax time is not the time to strategize. Tax time is the time to get the forms processed and to file the taxes. Then the next time is maybe June or July, where we should do a mid-year check-in to see whatever the goals that were set, are we meeting and making those financial goals, and what things do you need to do to meet your goal? Now, I know I'm going to push that. I'm like a business financial coach. So whatever those numbers are, I'm going to push you to your greatness, and I'm going to use the resources that I have from working with other successful entrepreneurs to help shift your mindset to the possibilities. Because sometimes as a new business owner, and we don't necessarily have friends that are further along in business than us. So meaning we don't necessarily have CEO friends that we can touch, taste, and smell. Like sometimes on Instagram, we see people, but we don't necessarily have them in our circle. But I just wanted to let you know that Black business is booming. Black business there are a lot of very successful multiple seven-figure business owners, and anything is possible. But as you try to scale, you are not gonna, like, you can hustle your way to 6 figures. You are going to have to implement strategy in order to get to that next level of business. You're going to have to have a team. You're going to have a financial management system. You're going to have to introduce your business to different tech. You may need investment dollars. You may need bank loan dollars. You may need more training, mastermind coaching, have a monthly retainer with your accountant, you may need a lawyer, you may need a couple of you may need a virtual assistant. So there's all these costs because that's what you're going to need. And eventually you're going to realize, in order to grow my business, I have to be the CEO. I cannot be the master or those, I think it's a software called 17 hats. I cannot wear 17 hats on my head and grow my business. I must learn to delegate as a CEO. I must learn to delegate. Okay, so financial order, hashtag financial order, hashtag profit per system, which is sales minus profit equals expenses. So we're about to go over this know your numbers example, but I just want to remind you, what you do not know, you cannot grow. So constantly not having a relationship with your business finances, if you don't know them, you can't grow them. How will you know if you're headed in the right direction? How will you know if you're meeting your goal, your financial goals, if you don't know your monthly expenses? How will you know if you met that 25% operating profit margin if you're not looking at those financial statements? How do you know what money you can spend on contractors and staff? Because you're just constantly guessing. You're at the running this business by the hip. And how can you evaluate future plans and make decisions when you're not tracking your numbers? All right. And then this is an example. This is what a lot of business owners' books look like. Does this look like financial order? Does this look like the CEO? Would the finances and reports and records of a CEO of a 6-figure business, multiple 6-figure business, do their books and records look like this? It's just something to think about. Something to think about. Okay, this is one of my clients. They try to organize, but what happens is this is a lot of what entrepreneurs books look like. And in our office, we'll take all these records, we sort it by the category, and we can get it to some order. But I really prefer businesses now to use the technology of QuickBooks. Okay, so now we're about to go into the Know Your Numbers template. This is the best part of the training. So to manage your business by the numbers, I feel like you need to set, budget, and target for different categories. And here is my formula to success. So I feel like cash, you have to manage the cash in your business. So your operating account would have 25% of all the cash per month. Your payroll, you would put 20%. Your tax account, 15%. Your marketing account, 10%, and your profit account, 20%. And you can use 10% for business reserves. So that's a lot of percentages, but basically we're running our business by the numbers. And so I'm going to now go into the example of my Know Your Numbers my Know Your Numbers profit system. So you can see it. And then, like I said, you'll get a copy of this to do your own, have a financial date night with yourself so that you can fill it in. Or if you need to, you could schedule a Know Your Number session, and then me and you can go over it if it feels overwhelming and you need support. So we're going to go over that next. Okay, so let me go over behind my system. All right. Okay, so we saw this slide already. Okay, so we're going to manage our business by the numbers. And what you want to do is you want to, by the quarter, so this is by the quarter, you want to, by the quarter, kind of project your sales and your expenses, and then you want to then fill in the actual. So I'm going to give you an example. I'm going to just use this template as if I was using it for my business. So sales are all the potential service offerings that you have for your business. We know for my business, it's like tax returns, some consulting. We now have webinars as a line item. I got individual tax returns. I have business tax returns. Okay, so we'll just keep it there. So this is what I do. I'm like, okay, how many, and I can only project it means I am estimating. It does not mean actual, but I'm estimating how many individual tax returns do I want, or what is my number for the month. So just say my number, oh, I need to put monthly accounting service. This also helps you to understand your pricing too. Okay, so my number is 25,000, I'll say, for the month. So we have monthly accounting, we have recurring revenue, which is clients on my monthly accounting package already. So I'm just going to say we have 15,000 of recurring revenue. Business tax returns, say for 550 times 20 people. And individual, I'm going to do 25 times 350. Webinars, 167 times, just say 25 people. And there we go. So I have just projected my business income. I've just projected my business income. So I said 25,000, but I guess it's 38,000. So if I want to make $38,000, then it looks like I need to sell 25 individual tax returns. I need to do 25 webinars. I need to do 20 business tax returns, And then the monthly accounting reoccurring revenue we already have. So we have retainer packages of $397, $997, $1697. And I have clients signed up that pay us monthly. So then that goes, there's our goal. And then you kind of estimate your expenses. So there's accounting expense, there's food, there's insurance, there's telephone, there is technology fees, different things. Each business has different types of expenses. So I'll say my QuickBooks is $25 a month, cell phone, I don't know, $150, accounting service, $997. This, I was like, if I want 2 people to help me at $15 an hour for 12 days, this is just an example, but I could have 2 people, $15 an hour, and I want to say 4 days a week, 4 days per week, 4 days per week times 4 weeks is 16 days. So you customize it to whatever your needs are. So if I have $15 an hour times 16 days, $15 an hour times 16 days, and then we have to actually multiply that by their hourly rate. So that's $15 an hour times 16 days times 8 hours a day. So 240 times 8. Okay, but long story short, you just fill in your expenses. My team probably costs, I don't know, just say 10, our payroll is like $10,000 a month. So with this being said, what else? Technology is about $1,000 a month. And that's it. So it's just, it's a projection estimation. So we have the projected sales and then the projected expenses. And so it's a profit of $26,000. So there's profit. And then so then these are my projections. So I'll do this for the first quarter. I'll do this like exercise for the first quarter because I want to have predictable sales. So then now I have to make sure that I sell 25 tax returns, 20 business tax returns, make sure that we keep selling that monthly recurring revenue. And then I should be able to have $26,000 at the end of the month. Easier said than done, but the point is I'm figuring it out. So it's basically all the things that you could sell to customers, you list over here, then you put the total there, and then all of the potential expenses, and then you just see, do you have a profit? Now, this is the projected. Then after the month is over, you actually need your profit and loss statement from QuickBooks. I would prefer, because then that would be the easiest way to fill it in. And then you'd be able to, like after you tracked all of those expenses, you're able to fill it in so you can see what actually happened. And then you can go to February. So if you did not make those numbers in January, you now can analyze, you can launch, analyze, optimize. So launching is, these are my services that I'm going to give to the world, that I'm going to sell to the world. Then after the month is over, I'm going to analyze it. Okay, I thought I was going to sell 20 business tax returns, 10 individual tax returns. I thought I was going to sell 25 webinars. So now when I look at what actually happened, I'm like, I can now make changes, because based off of based off of my projection and what actually happened, I may need to do something different. Now, my results can be this, or they could be this, better or worse. And if it's worse, then I need to figure out what happened so that I can make sure I have a successful February or successful March. But when you don't look at it and you just go the whole year and you're not paying attention to it, you have to manage your business by the finances. So this is my cash allocation part of it. And that's what this whole chart right here, the profit is everything, because what happened is you need to also manage your cash. As a CEO, you must manage your cash. So let's say you made $10,000 in the month, and 10% should go to marketing, 20% goes to the salary of the owner, 15% goes to inventory, 5%. So these are all the percentages. So based off of your gross sales, then it would automatically calculate for these different percentages. And you want to put 10% for taxes. So then that means if I made $10,000 after spending all the money on these different categories, then I would have $3,000 at the end of the month. But I also want to put 10% away for taxes. So this is the profit first methodology. If you guys have not read the book, what happens is that you take your profit out first and you take your taxes out, because one of the hardest part of managing a business, a smaller business, is the cash flow. So at the end of the month, what you do is you take 10% and you transfer it to a profit bank account. You take 10% and you transfer it to your tax bank account. And then if you have inventory, if you have like a product business, you could have inventory, but if not, your operating account would be 80%. And you transfer this money, so that way, when it comes to tax time, you actually have all the money saved. You don't have to like reinvent the wheel. You've been saving the money as you go. Okay. Oh, the name of the book is Profit First. It's Profit First. Yes, Profit First. The name of the book is Profit First. It's a very good book. It helps you to understand managing the cash flow in your business so that you're not frustrated in your business. But the simple trick is you look at your business bank account, whatever your gross deposits were for the month, then you take 10% and you transfer it to your tax bank account. You have 3 bank accounts. It's a 3 bank account system. So you have a business bank account, you have a tax, it could be a savings account, but a tax business account, and then you have a profit business account. And at the end of the month, what you want to do is you take the tax money out of your bank account and then you take the profit money out of your bank account. Why do you do that? Because if you leave all the money in that same operating account, what happens is you spend it all. And so, because a lot of us are running our business by the bank balance. And so you spend it all so that you can make sure that you have money to pay taxes, because if you have a profit, you're going to owe some taxes. Our tax table is from 5% up to 5% to 35% is the tax rate. So 10% is like a really lower tax rate. And it's very rare that you're going to be a successful business paying less than 10%. So I try to at least allocate 10%, because I don't believe in the expense strategy where you write everything off. That is a catch-22. So it's PPP time again. And a lot of business owners were not eligible to get PPP because they utilized the expense strategy. The expense strategy is where they had a loss on their taxes because they did not want to pay taxes. But as long as you keep your business and mindset about losing money, then that's kind of where you stay. So you want to like graduate to the next level of business. And this is a perfect system where then you have the money to pay the taxes, and you're not like at the end of the year sweating like, how am I going to pay my taxes? You put the money to the side on a monthly basis. In this template, you can like write out your team needs, because sometimes in order to get your sales goals, you can't do everything, and CEOs delegate. So you just want to maybe write out your team needs. And then this is where you may need support, but this is where you can actually map out the whole year. You can map out a whole year of income and expense. And you can update the template as you see fit. But if you needed some support, I definitely can help you with my Know Your Number strategy session. But it would just be helpful then if you're trying to make $500,000 in 1 year, or you're trying to have a profit of $100,000 a year, just by setting your numbers for each month. It's helpful to see what does that look like? And it's just projected. So this is the template. So I'm gonna stop sharing the template, and then, does anyone have any questions? Any more questions? Okay, so now I'm gonna go back to my slide deck, and we're going to talk about bookkeeping. We're going to probably talk about bookkeeping, and then we're going to actually log into QuickBooks Online, and we're going to go over what do some of the financial statements look like.
Yeah, I think I do have a question.
Okay.
So last year I didn't qualify for the PPP, or nor did I try because it was a new business. But now this month makes a year in my business. Do you think I'm a realtor? Do you think that that will be something I don't necessarily like is it something I should do or not do? I don't really know like where to begin.
You started, so you have to have started by February 15th. Did you start by February 15th?
I started my business, yeah, it was January of
Okay.
2019. So that's why I didn't do
And
it last year.
the PPP round two, because of course I'm done a couple of apps already. And although we went through the year 2020, I'm praying that they would take 2020's information versus 2019, but the banks seem to still want 2019 information.
That's what I was thinking.
What I would do is I would not count myself out. I would try, because one, if it's a first round of PPP, what they're asking for is they're asking for they're asking for a February bank statement. They're asking you, have you applied for PPP before? And then the documentation though to support it, that's the only issue. It's they're looking for either, they said they're taking businesses that started in February. So then they have to go off of your February number. So I'm not sure if they'll ask for your your 2020 business tax return if you're LLC, because they need something to see what your numbers are. If you did not have payroll, so they're either asking for like 941s and W-2s from your company, because it's a paychecks protection program. So it pays you for the payroll that your company had. And it does that in two ways. Either it's from the payroll, the actual payroll you pay to yourself and other people in your company via W-2, or if you're a sole proprietor or single member LLC, they could use your form Schedule C, line 31, to calculate it. So with the second round, and you start your business in February, I would still try. It's just that if you don't have payroll records, you're going to need to get your Schedule C done quickly. Need to get a Schedule C done, like meaning you're going to need to know what your income and expenses were for 2020 year,
That's what I
and you
was thinking.
can't have a loss. It has to be a profit.
Yes. And for me too, by me being a realtor, and I know I want to purchase property, what I was gonna
Yeah.
do is I'm not gonna count, even though I do have like I wasn't gonna do as many write-offs because I wanted to make it more of a profit. You get what I'm saying? So
Yeah.
my strategy was to pay a little bit more in taxes, but now I qualify for a bigger like I mean qualify for more.
Right.
Okay.
Yes. Because that's usually the catch-22 when a lot of people use the expense strategy. Then it cancels them out from PPP. It cancels them out from bank loans. It cancels them out from buying a home. It's like it's a catch-22. So I didn't pay IRS, but then I can't do the things I need to do. And the bank looks to see, were you successful? Did you have a profit? Because who wants to loan money to someone who has a loss, or who is the CEO of their business running the business into the ground as a loss? So with that being said, after you do your tax return, you should be able to get PPP. It's just that it's so new, but they said they're accepting businesses as long as you were incorporated by February 15th, then you were. And then, but since you would not have had a 2019 tax return, you're going to have to show your 2020 tax return.
Okay, that makes sense.
Yeah,
Thank you so much.
no problem. Okay, so now I'm going to go back to my slide deck, and then we're going to actually go over some financial statements. But let me go to my slide deck again. Okay. All right. So why should you keep good books and records? Actually, the IRS says everyone in business should keep good books and records. It's actually a law. It's a tax law. A lot of business owners don't know that, but you're breaking the law when you're not keeping good books and records because they do audit you sometimes. Accounting is the language of business. I just want to reiterate that one more time. You're in business to make money. Profits are everything. Know your numbers and then add tax. Now, here are some systems that you could use to monitor your business activity. There is QuickBooks, Intuit QuickBooks, there's QuickBooks Online, there's something called Xero, there's Expensify, there's FreshBooks, and there's TaxBot. Now, which one? My software choice is QuickBooks Online because I just feel like it has the best versatility as you're trying to scale your business. So you can start with, if you make 50K in income all the way up to your 7 figures, you can use QuickBooks because it is an account. It's a known traditional accounting software. FreshBooks, I like FreshBooks for people who are consultants because their invoice management, meaning when you're sending invoice to other people, their invoice management system is excellent because you can send the invoice to people and then you can see that they open up your invoice, and just managing your accounts receivable is actually really easy with FreshBooks. And the accounting, it does have an accounting function. I personally don't prefer it like I do QuickBooks. But you can also send invoices in QuickBooks, and I think they added the feature where you can now see if the person opened the email. And there's also a feature in QuickBooks where you can do a recurring, because I just wanted to let you know, like as we're trying to build and scale, having recurring income is actually a plus. If you can find a way to like think inside your head, what could I do where someone could consistently pay me monthly so that I have a base of money coming in despite being a realtor, despite doing whatever you do. Because that monthly retainer income and having dependable, predictable income, there's nothing like it. So I guess you could lead a membership program. What could you do? You could lead a membership program. Maybe you lead a training program like other women that want to be have their own mortgage brokerage and etc. And then they pay you monthly for you to train them or get on a training. But having monthly recurring income, it's nice and it helps you to scale faster. And just having something that's predictable. There's TaxBot, which is really good for like if you have a lot of receipts, instead of having that messy table of receipts that you saw, like you can use your cell phone and easily take a picture of the receipt and then upload it. So TaxBot is great and really easy to use if you have a lot of receipts. FreshBooks, Zero's good for e-commerce businesses, meaning businesses that have a lot of products with a lot of SKUs. FreshBooks has really good tech for that. And Expensify is free. I think they have an accounting function, but it's free and it at least keeps up with your expenses. So that also has a receipt capture module where you can take your cell phone, take a picture of the receipt and upload to Expensify, and it's free. All of these, I think, all of these systems have a receipt capture module where you use your cell phone and you can upload receipts. Because if you get audited from the IRS, then it's very important that you keep your receipts. So let's talk about financial management system. I prefer QuickBooks. I really do. I feel like if you're a CEO and you know you're going to be 6 figures, scale into multiple 6 figures, 7 figures, you just don't, it's too hard and difficult. And who has time to manage their books? Who has time to like take all the receipts, add them up and put them in a spreadsheet? Because that time just never comes every month. So it's best to have a business bank account, connect that to QuickBooks. Excuse me for 1 second. I need to get some water. Have a business bank account connected to QuickBooks, and then you're able to have like financial statements. So I'm going to show you what some QuickBooks reports look like and what are some reports as a CEO that you should use in your business. I'm gonna log into QuickBooks. Okay, 1 second, I'm logging into QuickBooks. All right. Let's see who's. All right, I found the sample company. Come on, technical difficulty. Okay, give me 1 second because I need to log into something that is just for me and my business and not, I don't want anybody else's business. So I'm going to log into just so you can see the report. So, yeah. All right. 1 second. I have like a balance sheet and profit and loss on my screen, but I want to show you QuickBooks. I want to like log in and show you QuickBooks. It'll just be better. Let's see, what else could I talk about while I'm trying to do this?
Indiana, QuickBooks have like different versions, right? They have like a
Yeah.
QuickBooks Online, QuickBooks Entrepreneur. I don't know, like an employee or something.
So there's something called Simple Start, and then there is QuickBooks with payroll. And if you're not going to have payroll, then you should just do the Simple Start. It's about 20.
After me and you talked, because we talked, this is like my third time with you. So we talked this summer. I actually started paying myself, like I W-2 myself.
Oh, you did?
Yep.
Oh, great.
I started W-2 myself. But me and you need to talk more because you told me about a strategy to W-2 my children, but I didn't know how to actually do that. Or like, I mean, because right now it's just I'm on the payroll, but I wanted to put my kids that's under 18 as a strategy too. But I'm not making that much money yet to be able to. You get what I'm saying?
So that's like one of those tax strategies. And what I would say is the catch-22 is that you're trying to buy the home.
Yeah. So don't do that. Yeah, that's why I was waiting for that, right? Because I don't make as much. I need all my money now to qualify for the building. So I was going to wait to after I purchase my building and then maybe use a strategy like that. That makes sense, right?
Yes. And then you actually don't have to put them on. You don't have to put them on payroll. If you're a single member LLC, you can just pay them, but you have to pay the money to their bank account.
Yes.
Okay.
Yeah. Okay.
Okay, so I have it pulled up. Now, this is just a sample. This is not like a full anything. It's just a sample. So let me go back to my Zoom. Share screen. Okay. Now, all right. So in QuickBooks, there's different reports that you can have on a regular basis. And as a CEO of your company, there are certain reports that you should look at just once a month. And that's why having QuickBooks is kind of convenient, because now you have a way to compare your actual versus your projected. So the report is your balance sheet, your profit and loss statement. Those are your two most important reports. And then there's something called a cash flow statement. Now, the cash flow statement, basically, it's a statement that displays your cash ins and outs. But I will say, even as an accountant and a former accounting student, it's actually quite confusing. So I don't like the cash flow statement. So I like the basic statements, which is the balance sheet and profit and loss. So let's talk about what the differences are for those statements. So profit and loss is basically your income and expense. So I'm just gonna put a date. Profit and loss is income and expense. And so basically, it shows your income, which is, in this example, is 183. And then it shows your different business expenses. And then you look at this net income. Now, what I was talking about as far as profit margin, remember I said the operating profit margin should be 25%, because every time I look at my profit and loss as a CEO, I want to make sure I have 25%. So what you can do is, I don't know, I don't want to get too technical with QuickBooks, but you can go to customize, and then you want to I actually want to compare my, I want some percentages. How do I get my percentages? Here we go. So I want to compare to another period, and I want to do percentage of income. Percentage of income. So you compared to another period is in QuickBooks, and then you go percentage of income and run report. All right, so in whatever accounting software you want to look at this monthly so that you can see the percentage of income. So what I was saying is, as a CEO of my company, my net income profit should be 25%. Here in this example, you see net income. Net income here is 51% of the profit. So the gross revenue. Gross revenue is 183,676 in this example, and then after the gross revenue minus all of the expenses, then the net income. So it's 51%. So as a CEO of this business, I'm like, this is good. Actually, my margin is way better than I ever thought it was going to be. 51%, because my margin is 25%. Maybe I want to increase that, my predictable number, up to 40%, since I made 50% this year. But you also want to look at, this is when your accountant can help you, so it wouldn't be so nerdy and so like overwhelming. But you can also look at like the previous year. You can look at the previous year, because you kind of want to see, there is no previous year. This is an example. But anyways, you could then compare your current year to your previous year. And that's what you could do. So you look at these, but you want to look at the numbers, because I want to look at the gross revenue. I want to look at the expenses. If there's any of these categories that I don't understand, that I want to like rent and lease, I want to look at it like, well, what did I spend the money on? So That's what you want to do with your QuickBooks report, and that's the profit and loss report. The profit and loss has your income expense, but then you also want to look at your balance sheet. Your balance sheet is the historical value of your company as of a certain date. So you look at your cash, like, well, how much cash does my company have? Your assets. So assets are like cash. Accounts receivable are invoices that you sent out to people, but they didn't pay you yet. Then you have your liabilities. So you owe your credit card, if you have any bank loans, and etc. Then you have equity. Equity is actually the historical balance of your company throughout the year. So a lot of business owners don't understand retained earnings or the equity column. So the equity, if you're trying to sell your business or buy a business, this number needs to be positive. And if this number is not positive, that means that business has not been making money, because each year the business makes money, it adds to this retained earnings. And then the banks don't look at retained earnings. But when people are investing in your business, or if you're trying to buy a business, I know, like, if a client's trying to buy a business, they'll show me, the first thing I'll ask for is the financial statement. And then one of the things I'm first looking at, I'm looking at that retained earnings, because I don't want my client buying a business that's not profitable. But a lot on this statement, I usually look at the cash balance, and I probably would do another comparison statement with with a comparative statement with my balance sheet, because I kind of want to see, is my cash going up? Now, what I'm going to do is previous period, dollar change. It should do the month before. So I would do a comparative statement. This is a sample QuickBooks, and I'm so sorry it doesn't have like a whole bunch of real information in it, because the column should not be the same. Let's see if I do quarter to quarter. 10/01, 19, 12, 31, 19. Okay, so I did a comparative statement, and as you see, like, as of October 9th, the cash was 97,000. Then as of October 31st, the cash was 100,000. The change is 2,904. So the comparisons, as a CEO, the comparative balances make a difference, because I want to see my cash going up. If my cash is not increasing, I need to understand why is it not increasing, or I need to protect my profit margin. And so I just showed you on the profit and loss, the profit margin for the year, but you actually could pull up a P&L statement, and then you look at your operating profit margin by the month, because each month, if I set that number at 25%, it should be 25% or more. And we also know that some months are better than others, but basically just getting used to your accounting statements and having them, because it just gives you power to just really know your numbers. It just gives you a whole lot of power. Now, does anyone have any questions on, like, the financial statements? No. Okay. Now, what else do I want to talk about? I kind of wanted to go over, like, the S Corp strategy and what does that mean. You know what, I'm gonna go ahead and share my screen. This is actually, to be honest, this is my goal for the 2020 year. This is my, like, income goal. And I have already, this is actually for this is what I did in 2020, last year. I every year do an annual plan for my business. And I sit there, and remember I gave you on the Know Your Numbers template, it just looks a little different, but I sit and I estimate how much can I sell for my different service offerings. So for example, I knew that we had recurring monthly revenue, meaning I have accounting customers that pay us once a month, and it totals maybe 10K, and that I would prayerfully have that for 12 months. So that'd be 120,000. Then a boss client, meaning a client that would do a higher retainer package, meaning they would pay our company $2,000 a month. And I figured I would do 5 of those. I would sell 5 retainers at $2,000 a month, and then I would have that all year. So I'm kind of playing with my numbers. I would do a coaching program. I'm gonna sell 10, and then here you go. Then I would do business tax returns. I'm gonna do 100 business tax returns, 75 corporate returns, 20 returns at 675. And so all of that, these are all the services that my business could potentially offer. And I could delete some, do more, whatever, but these are all of the potential services. And you see, and then I put the quantity, like, well, how many of each, if this is my sales price for all of these services in my business, how many do I need to sell? Or if I sell how many, what does that equal? So for example, on a C Corp return, if I sell 75, that's $63,000. On my, these are my single member LLCs. If I do single member LLC and I do 20 of them, that's 13,940. So long story short, you see it adds up to 913,403. Because if I want to make 7 figures in my business, I need to see out of what we offer in our business, how can I make this happen? And this is an exercise I go through every year. I already actually did it for 2021. And I kind of go, and then monthly, I try to make sure I write down what are the monthly, what's the revenue each month? Because I want to keep up with it. If I'm trying to make 7 figures, then I need to make sure that I am every month, look at the bank statement or look at the profit and loss statement. And then I'm like recording what actually was collected in that month. Because if this is my ultimate goal, 913,000, then sometimes I may actually need to hire a marketing firm to help me get close to the sales. Maybe I need to do more IG lives. I need to do something so I can get to my goals. All right, now we want to talk about S Corps a little bit more and just understand the S Corp strategy. And then I can, in the training, unless there's something specific, does anyone have something specific they want to ask? Or I can help you understand? Okay, so we're going to go over the S Corp. We're going to go over S Corp next.
I think after talking to you last time, I had I did because I was a single member LLC, but I don't think that I was reported like that. So I had to contact the IRS and fill out that form. And now I am
2553.
Exactly. And so
Okay.
now I'm going to be taxed as a
S Corp
because I'm a single
Okay.
member. But I have a business for my daughter. She's 19. She has 2 different businesses. One is like music, and then one is hair. But I did a partnership with me and her. But I think that after talking to you, I think I might have messed up because now it's 2 members in the LLC. So I can't be taxed as a single member because it's 2 members. You get what I'm saying?
Yeah, because you can only, 2 members is a partnership tax return. If you went and when you filed the EIN and you told them 2 members, your EIN letter says you probably need to file form 1065. Now, the LLC is a disregarded entity, so you would have to take the other person off.
Okay.
The only people who can be single member LLCs and still file on their 1040 are if you're married. If not, you're a partnership. Now, that doesn't necessarily mean it's bad. Are you not wanting your daughter?
She's not good with money.
So you don't want her to have you don't want any tax information placed in her, like.
Well, because she's not good with money. And like, what's like, so say if she's a rapper, right? And at some point, I don't even want her having controlling interest because somebody can offer her something like a Rolls Royce and she'll sign and she doesn't know anybody. You know what I'm saying?
Yeah.
And like for me, I would just want to have her best interest at heart. So that's why I did that for her, because I'm just trying to protect her from herself. And she understands that, you know? So I was just thinking, like, do I just make it only in my name or only, if I put it only in her name, I'm just worried about because she's still young, like everything I pay for I formed the LLCs, I formed the bank accounts, like I do all of that for her.
Yeah.
She just Yeah, she's a talent, but she doesn't. I'm trying. I'm trying to teach her, but as we go. But I want her to have interest, but not controlling interest because she's not ready yet. That was it.
So I'm trying to see, is there any benefit to her having any interest more than just, I don't know, as a person that's working, just um, as a person that is working, basically, and you're making all this money, you just would want your name on something. So I don't know how she feels. I don't know if
Yeah,
she's
I know. I
like,
got to talk to her too because I don't know how she feels either. Because
yeah,
yeah, because if it's really her, like she does all of her own music. She's the one. She's the talent. She's good with when it comes to hair and beauty. She sells lashes. She makes wigs. She writes her own music. She sells feature. She does, she writes music for other people. She does video. She does everything. Only
okay,
thing I'm trying to do is help her with the business end of it. But I just don't
okay,
want her messing herself up, right? So that was
right.
it.
So I completely understand that. That's a decision you guys have to make. So I would say that, yeah, that's a decision that you guys have to make. You have to just make that decision.
Maybe one
Uh,
day I'll just like me and you'll talk and I can like hire you as a consultant and you'll have a meeting with both of us to say what's the pros and the cons and the benefits of doing it the way that we do it now or having a single member, you know?
yes,
But right now we're
yes.
not making a lot of money. Right now I'm spending a lot of money, but it's not like a lot of profit yet. It will be eventually, I'm sure, but right now it wasn't. But I'm like, I'm trying to think in the future and say, what's the best way to set up the companies for us to succeed?
I think the 1065 is a good start. It's just that now that it's tax time and you set it up and it has two members, so now you have to be conscious of that so that you can because what's going to happen is that there's going to be a tax form sent to her and then there's a tax form sent to you.
And you
That's
know
what
what?
ends
I'm
up
okay with
happening.
that because it's not a lot of money right now. We haven't. It's
Okay.
yeah.
But
We
but it
know.
still requires you then to file a form 1065 when maybe you didn't need to, when you could just have the information on your 1040.
Oh, okay.
So you just could maybe remove her off of the paperwork, and then um, that way you can then do single member LLC.
Okay.
Okay.
Thank you.
Okay. So now I finally found it. My apologies. Gotta get my tech together. So I'm going to give you an example of how the S Corp strategy works and why is it a tax saving strategy. So we're going to actually talk about that. Okay, I want to close this one. S Corp tax strategy. All right, one more second. I'm trying to pull it. I'm just trying to share my screen. Then I'm almost done with this training. I found it on my desktop, but it won't let me. Okay. Okay, there we go. All right. So this is comparing like a sole proprietor or a single member LLC. And what happens when you do the S Corp tax strategy? What does an S Corp tax strategy, what does that really mean? Why is it a savings tool? So what happens is when you are a single member LLC, there is something called the self-employment tax. The self-employment tax is the FICA and Medicare that you're paying on all your earnings. So basically, if you make $100,000 It's just like when we had a W-2. So when we had a W-2, you remember with the W-2, there was FICA and Medicare that was taken out of your check. So the earnings, when you are sole proprietor or a single member LLC, you still pay self-employment tax, but you pay self-employment tax, and it's ×2, because that's how our Social Security system works. Because as an employer, when I take out the FICA Medicare out of my employees' wages, then I have to match it. So even as a sole proprietor, single member LLC, you also have to match. So it's 6.2% for FICA, 1.45% for Medicare. So when I double it, that's 15.3%. So as you see, whenever if I earn $50,000 in a Schedule C or single member LLC, the self-employment tax is $7,650. If I earn $100,000, then the self-employment tax is 15.3%. What the S Corp strategy does is it eliminates or minimizes this 15.3%. It makes you pay less in taxes. So just say in my Schedule C single member LLC for the year, I earned $100,000 in the single member LLC. So that's going to cost you 15.3% of the FICA and Medicare. The S Corp strategy, what happens is you still have to pay yourself a W-2. As an owner of an S Corp, you are supposed to have salary and be on payroll. So you would pay yourself a salary, but then the other part of out of making $100,000, if you pay yourself, I'm gonna say a salary of 50,000, and then you would have net earnings of 50. So what happens is you end up, instead of paying 15.3% on all 100,000, which you're forced to do as a Schedule C or single member LLC, when you have an S Corp, you can elect your salary to be 50,000, and then you pay the self-employment tax of 50,000, and then the rest of it can just flow through to your ordinary tax, to your tax rate, to like your personal tax return. And you can play with this number in any form or fashion. I could pay myself 30,000, and then I have 70,000 like flow through to my personal tax return. Now, there's a rule called reasonable compensation. So reasonable compensation is what would a reasonable person get paid in the S Corp for the job that you're doing. So the IRS understands that this is a loophole, but they don't want you to take advantage of it. So typically, there's actually reasonable compensation studies, or there's companies that help you to understand what is the reasonable compensation for your business. But I would say if you make 100,000, 50,000 is reasonable, maybe even 40,000 could be reasonable. It just kind of depends. But by utilizing this S Corp strategy, we have saved $9,180 in taxes. That's a lot of money. So, because if we have a single member LLC, we would have paid $15,300 in taxes. By electing to be an S Corp, we are saving the difference between 15.3 minus 6120. We're saving $9,180. And over 3 years, that's $27,000 of money. Then when we talk about tax strategy, let's not forget, because this is a year where we're not as concerned for purchasing a home or really purchasing real estate, because then I don't have to have my profit at 100,000 to, buy something. I could maybe then use my other tax strategies like paying your child or whatever other like write-offs we have, like expense in our car, expense in our home office, using our cell phone, doing our continuing education, and just really whatever eligible expenses you can have. The strategy is not, this is like when I'm doing tax planning, the strategy is not how do I write off everything so I can not pay Uncle Sam, but it's more of I've made so much money, We focused on all the profits that we could make in our business. We've made so much money. Now, what do we need to do to minimize the taxes? So the problem is making too much money. And that's when we do tax planning. And like I said, you can pay your child. We can go through some various other, like home office, your travel, your car, and various other deductions. But just saying, we pay each child, you can pay $12,200. Say you have 2 children. Then, and I find you 15,000 more of expenses. We pay the 2 children. The total write-offs we find are $39,000. If you are in a 30% tax rate, that's an additional $11,000 of saving. So just by doing tax planning, which tax planning, like I said, you come to your accountant once at tax time, maybe mid-year to kind of do a strategy session, and then towards the end of the year to do tax planning. And you see, we were talking about Jeff Bezos and all of them, and they're like the orange guy. And how do they not pay taxes? Well, they actually go through the different strategies in the different tax code to save the tax dollars. And so just by implementing the S Corp strategy, paying 2 of our children, and finding additional legal business deductions, this tax plan has saved someone $21,000 in taxes in a year. And in 3 years, that's $63,000. So that's why I said tax savings and tax planning, it's a wealth building strategy. This is what helps you to build wealth. Okay. Oh, you're not sure if you're seeing the correct screen? I'm just been talking. Okay, let's see.
Yes, we see the one that your computer screen where you got downloads, and we see all your like downloads, but I don't.
Oh, you do? Okay.
That's all we've been seeing for the last. That's for me. I don't know for Melanie, but
okay, that's what she's saying. I just been talking away. Oh, the wrong thing. Can you see it now?
Yep.
The S Corp? Okay.
There you go.
Okay, sorry. This is what I've been talking about. My apologies. Okay. So that's what I was saying. If your Schedule C, if you made 50,000, then the self-employment tax is 7,650. If you made 100,000 as a single member LLC or a sole proprietor, your taxes that you would pay, the self-employment tax is 15.3%. That's why utilizing the S Corp strategy, I still have 100,000 of income, but 40,000 I'm going to pay on a W-2, and I'll pay 6,120 of self-employment tax, and then 60,000 I'll let flow through to my personal tax return. So just by implementing the S Corp strategy, because if I stay a C Corp or a single member LLC and I make $100,000, I have to pay the 15.3% of self-employment tax, and it's actually in addition to whatever federal tax I would pay. But if I use the S Corp strategy, I could pay myself a salary of 40,000, then I would save $9,180 in 1 year. Then, just for tax planning purposes, at the end of the year, we'll go through whatever additional deductions I could find for you, home office, purchasing your vehicle, cell phone, traveling, your continuing education, and just whatever we come up with as far as additional expenses. Just say I find $10,000 more of expenses than if you pay your child. What happens is that these additional deductions, say, and if you're in a 30% tax bracket, they save you $6,600 of income. If you got 2 children, then that saves you $10,320. Then we got retirement, like a retirement expense, IRA, for solo 401k. Say we put 10,000 in that too. Now your total tax savings is 13,320 after we go through thoroughly how much additional expenses you would have. And then your tax saving for the whole year is 22,500. That's why I see tax planning pays for itself. So this is part of tax planning and just thinking after you've made all the money, how do we reduce our tax bill legally? Okay. How do you make the, okay, and so Melanie said her children are grown. How do you make the S Corp tax strategy work? Well, the S Corp tax strategy, it still works. It still works just due to the fact of this right here. Because if you're a single member LLC and you're earning 6 figures of income, then your self-employment tax is 15.3%. I mean, it's 15.3%, which is 15,300. If you change to an S Corp, you still save 9,180. If you don't have children, the children is not necessarily part of the S Corp strategy. It's just a strategy of getting additional write-offs. So there are things called, there's an accountable plan, which it's kind of like your home office. So what we do is we take your home and we rent it to your S Corp. And we can have a deduction for that. You can put money away for your retirement. You could, I don't know if you have grandkids, you actually could pay the grandkids if you wanted to. But if there's no children, there's still additional write-offs. So no matter what, even if you had no children, the S Corp strategy saves you $9,180. Would it be advisable to start another company and put each rentals in the LLC? So I know that a lot of people who own rental property and real estate, what they do is to kind of protect the property, meaning so that if you have 4 properties and if you have one LLC, 4 rental properties, and somebody slips and falls, then what happens is they could sue your LLC. So I know a lot of real estate investors were taking their properties and putting them in separate LLCs. Someone once told me that if you had insurance, that's a way you can protect the properties. But I would say if you have like large multi-units, it never hurts to actually have an LLC for each property, but it just really depends on the strategy that you're going to implement in your business with these properties. So if you're going to buy 2 to 3 a year, maybe you want to just have one LLC each year. It's somewhat of a personal choice for me, and tax purposes, it does not help or hurt the tax reporting to have separate LLCs. It's more of a legal protection thing. And it's more of if someone, like I said, if someone slips and falls, they can't come and they can't sue your company that has all 10 of your properties. They can only sue the property that has that one unit in there. So then that's why some people do separate LLCs. I kind of like to see 3 to 4 properties in one LLC, or if you have multiple units, meaning multi-unit, not a 2 or 3, but one of the 20 units, like when you have one of those buildings that have 10 units, 20 units, just way more units, then I would do separate LLCs for anything that has like 4 or more units per property, just for protection purposes and just to keep the numbers separate. Because if you have, we want to make sure we understand what our profits are. And if I got, for my rental property, if I have all of them all in one LLC and I have one bank account, I'm not as clear on how much each building is making, and the record keeping is going to drive me crazy, me trying to track my rent and expense per property when I have all 4 properties in one bank account. So at minimum, I like for my, I'll say business owners, real estate investors, at minimum, you could have one LLC, but I would do 4 different bank accounts. I would have a bank account per property so that you could track it easily, because you want to know which properties are profitable and which ones aren't, because if there's a property that's not profitable, you may want to cut it loose. You may not want to keep it. You may want to get rid of it, and you won't know if all the money's going into one account. You may not be, and it's not as clear as to which one is losing money. So you can like cut the bleeder, let it go, and then move on, buy something else. Because you don't have to keep a property that's not making you any money. You don't have to do that. Okay. Does anyone have any other questions for me?
I think I'm good. Thank you.
Do you have any other questions, Melanie? No? Okay. I think I said I want to talk about how you pay yourself. So we briefly talked about it. So Alexandra, you said that this year you definitely you utilized the S Corp strategy and then you put yourself on payroll.
Yes.
And then I wanted to also talk about 1099s versus employees. A lot of people get this confused, but how do you know when to hire an employee? Or that's not my specific question. Like, how do you know when you have team that helps you to get work done? Are they a contractor, 1099, or are they an employee? And what is the difference? So the difference is basically essentially control. And another rule of thumb is if your contractor is in business for themselves, then they take business from other people. They do not just work for you. They are in business. They got a business card. They got a website. It's very clear that they are taking contracts from different people. In that regard, they're a contractor. But when you have a staff person that just works for you, where you're telling them to come in from 9 to 5 and you're always controlling their schedule, the IRS may not consider that person to be an employee. So you want to be careful because contractors, they are, they usually take other jobs. They usually take other jobs and etc. Now, paying yourself as a CEO, this is important. So if you find yourself in business and you're going month to month, year to year, and you're struggling to pay yourself, then what happens is you have to have a shift in the mindset. And the mindset shift is basically back to those sales. So if I constantly, because what happens is when you are in business and you're spending everything that you're making, what you're doing is activity. So you're basically in business to pay other people, not to pay yourself. And we are CEOs. We are not in business to pay other people. We are in business to, meaning the whole purpose of the business is not just to pay other people. I don't want to have 10,000 in, 10,000 out, and then I never have any money for myself. So that's why looking at your numbers and even looking at your bank account balance, because when you have profits, that bank account balance goes up every month. Like meaning in January it'll be 10,000, February it'll be 12,000, March it'll be 14,000. If you do not see a trend where your cash account balance is going up, that means you're not making, that potentially means you're not making profit, or you got a loan. If you got a loan, the cash balance went up. But other than that, if you had no loans, if you didn't put your own money in there or you didn't get a bank loan, then what that means is you're not making a profit if that cash balance keeps going down, or if you as the owner, CEO, has to keep putting money in. So you really want to, it sounds like Alexandra, one of your businesses, you're basically in the investment phase, and it looks like with that type of business, maybe like that music business, it's front loaded with investment. So it's not normal. It's not like real. It's not up and running yet.
No.
It's like it's front loaded with investment. So that's different. But for everything else that we do, if we don't have enough profit, we have to charge more. Something's not right. Like if you own real estate and then every month you have to keep putting money in, you really need to think either you got to go up on the rent, and if the market does not let you go up on the rent, then you may want to get rid of the property, get another one. You can always, like, instead of a 2-unit, you can get a condo. You want to make instead of it being in Bronzeville, you can go to Oak Lawn. You know, you just want to make profit because over time, I have one client in real estate, because a lot of people get very emotional about their real estate, and every year, and I call it a bleeder, so every year you got a loss of like $15,000. Now, does it help, or does it help reduce your taxes and reduce your taxable income? Sure. You got a W-2 job and that $15,000, and I'm talking about a hard loss, not the depreciation loss, but like a cash coming out of your pocket loss every year. So you have this $15,000 loss every year, and I'm like, over 10 years, that you know, over 10 years, that's what, $150,000. That's a lot of money. And at that point, you may want to consider, do I need to keep this property? Because while you're waiting on the market, now that goes into real estate people and real estate and analyzing the market. But when I look at it just as a cash investment, I'm like, even if the market appreciated and all of a sudden the house was worth 100,000 more, you had a loss of 150,000 over all this time. You've done activity. So we don't want to do activity. We want to run our businesses by the numbers, and we want profit. If we don't have profit, we need to make decisions to either end a service, like discontinue a service if it's not profitable, increase your prices, change up your team, but you constantly want to make decisions in your business to make sure your business is stronger and you have profit. You have profit, because profits are everything. Now, any other questions for me?
No, but thank you so much for everything.
Okay, well, thank you. Thank you, Alexander, for joining me. Thank you, Melanie, for joining me. Do you have questions, Melanie?
No, I don't, but thank you.
Thank you.
I really do feel that I could definitely use more knowledge here, because this is, oh my gosh, I'm sitting here like scratching my head now.
Okay. No problem. So I'll send the template, and like I do, if you need a private coaching session, I do that too. Because I could just work in tandem with you as you're growing and scaling.
Okay, for sure. Because I have been in business now for, I want to say like 6 years. And each year we have been successful in getting one rental. Both my husband and myself would work up until this year. This year was a rough year. But just knowing all of this, I guess my business has been, as you said, a fly by the hip or fly by the seat kind of thing. We, have definitely made strides, but it doesn't reflect itself on paper, if that makes any sense at all.
Yeah.
And I had spoken with you, I want to say in October. We had a great conversation, and my situation was that we had the tax accountant that was in North Carolina, and we're in Georgia. And with that, we don't feel like she was really representing us. I mean, or at least we didn't feel like her expertise was really in the investment end of real estate.
Yes.
So I don't know if you remember this or not, but yeah, so we definitely need to have a better corrective course than what we're doing right now.
Okay, well, so of course, like I said, I'm here to help. And then thank you both for joining me today. I sincerely appreciate it. And I'm a tax strategist, and then I'm all about making money. So I could, whatever that plan is, we could dive deeper if you wanted to, Melanie. And I know I'll talk to you soon, Alexandria, or something. Thank you both for joining me, and I'll send the replay and all the templates as promised.
Okay, thank you.
Thank you.
Thanks, Alexandria.
Thank you.
Thanks, Melanie. Okay. Bye-bye.
Bye-bye.
Okay, take care. Bye-bye.